Welcome to Self-Funded. I'm your host, Chrissie. 10 years ago, starting a business around yourself was something reserved for celebrities. Today, professionals everywhere are breaking away from the 9-to-5 and building businesses around their own experience and expertise. On this show, we'll explore what it really means to be self-funded, the movement of professionals carving their own path, creating cash-flowing businesses, and building lasting impact without waiting for permission. I'll share my own journey and talk with others who are rethinking what's possible when you take your career into your own hands. Let's dive in. Today on Self-Funded, I have a conversation with Peyton Vitter. Peyton is the founder and managing partner of SMG Capital, a CFO advisory firm that helps multi-unit businesses, especially restaurants and franchisees, build financial infrastructure, reporting systems, and strategic clarity to drive growth and prepare for capital events. Peyton started his career in a variety of financial roles, at a fund-to-fund in private equity and then private banking. Across these, he ended up building a network of franchisee owners. He initially went down the path of entrepreneurship through acquisition, but when the deal didn't close, he pivoted to provide a critical service to these businesses that they lacked, focusing on data and building and scaling financial capabilities. We talked today about his journey, how he got started with SMG, where the business is today, and the advice he'd have for someone who's trying to make the leap from finance into entrepreneurship. I hope you enjoyed today's conversation. Peyton Vitter, welcome to Self-Funded.
Thanks, Chrissie. Thanks for having me.
Yeah, I'm excited. You are my first inbound guest. I was very excited when I got your email that the word is spreading and the movement is growing. So I appreciate you reaching out.
Absolutely. Happy to be here.
So let's jump into it. So I want to talk about a bunch of things. Let's start with where you are now and then work our way backwards. You have kind of a traditional finance background, but are doing something much more entrepreneurial in finance now. So I want to get into that. And then just put your hat on as an advisor and think about, for self-funded businesses, how to think about finance. But we'll get into all of it. So why don't we start with, you are the founder of SMG Capital. What is SMG Capital?
Yeah, SMG Capital. So we do CFO advisory work for multi-unit businesses. We concentrate on restaurants, franchises, and real estate more specifically. And as we think about kind of the services that we bring, it's really everything post books closed. So you think about like accounting, it's data in, books closed, and there's analysis and strategy, budgeting, forecasting that comes after that. And obviously, as you get more, as you grow your business, and you get from 5 to 10 to 15, even higher than that in terms of revenue, that complexity of how you think about growth increases dramatically.
Mm-hmm. Mm-hmm. And so you started, your experience is cuts across a bunch of areas of finance. And so not as much as an operator, you sort of ended up in more operational finance, but tell me a little bit about where you started on your career.
Yeah, sure. So I ended up starting out at a fund-to-fund structures and asset management company. We had about $1 billion of capital. We allocated to private equity. It was about 80% private equity, and the balance was hedge funds and liquid strategies. For me, that was a bit of a slower pace of finance. You're really allocating to these larger funds. You're not really getting into the details of all these businesses and how you think about the mechanics of growth and whatnot. But from that lens, it gave me the perspective on what was good from an LP level, from a fund level. But like I said, I kind of wanted something a little bit faster paced and get more into the details on how businesses actually were growing. From there, I went to a small private equity shop that focused on special situations, so turnarounds, taking companies through bankruptcy and transactions of restructuring. And that's where I really got thrown into restaurants. Of the $500 million, it was kind of a small fund that we managed. About 30% of our portfolio was within restaurants. We had about 500 restaurants under management across 6 brands, and I was an operating partner for one of the brands there. So I really got thrown into the details and the trenches in terms of how to operate, not only at like the management level, but also at, let's say, a restaurant level operations. And that kind of gave me the experience, and I would say really all the scars that that an operator gets as they just go through their experience. And from there, I went to JP Morgan and had a brief stint in the private banking, I guess you could say private wealth realm. And I would say that it was a good experience, and I really liked working for a large institution and getting like the network, especially here in Houston, Texas. But what I found was that I was most engaged working with businesses, and although I had a passion or an interest in working on personal finance, I really kind of, I'd say by the like negative, I forget what the actual term is, but crossing off the fact that I didn't want to do personal finance, but I really wanted to work with companies' balance sheets, which led me to what S&G is right now.
That's interesting. So it sounds like, were you working with companies there from the perspective of, hey, a lot of the people who own and operate those businesses have significant personal net worth, and how did you end up engaging with companies while you were on the private banking side at JP Morgan? Yeah,
sure. It was mainly through the business owners themselves. A lot of the clients that I had were actually private equity and hedge fund individuals. So, so it was through kind of a series of lenses, I guess you could say, through their fund and through their portcos.
Okay. So it sounds like you had a pretty robust background across a bunch of different sectors. And, you know, for folks who are listening who are not as familiar with the intricacies of the financial services world, I want to kind of take a step back and say, like, okay, so you were first taking capital and putting it into funds, which then the funds are directly investing in some of these businesses. When you join the PE fund, you end up kind of jumping to that side. Then from the private banking side, you were working, you know, in a different way with these individual entrepreneurs or the PE leaders and so forth. So sounds like you got to see a lot of different ways capital flows through this, you know, PE landscape. Is that right?
Yeah, exactly. There's so many different ways of how capital actually gets into a business. And I would say nowadays it's more and more in private equity, as private equity is, especially at the smaller end of the range. If you just think about where private equity was and where they're going right now, opportunities at the larger end, we could say $1 billion plus up, are becoming fewer and far between. And private equity is now going down into the lower middle market and even lower market. There was an article maybe 4 or 5 years ago in the Wall Street Journal that said private equity wants to wash your car.
Yeah, I think I remember reading this article actually. Yeah.
Yeah, so it's interesting, the dynamic. And so there's an obvious attraction in this space. There's a lot more risk, I would say, just in small business generally than say something you're buying on the S&P. But there's so many different ways to look at this, and I think being in this type of space where private equity is getting into is very attractive.
Yeah, and I think at the same time, it's opened a lot of opportunity up on the services side, which we'll talk about because that's, you know, how you are engaging now. So tell me a little bit about, you know, your journey. Okay, private banking. Obviously, you had the chops and the experience to sort of do an FP&A/CFO role within some of these companies, but that is a very different way to function, or different model. Tell me a little bit about the transition there and how you went from private banking into kind of building this services business that really supports some of those entrepreneurs and businesses that you engaged with.
Yeah, sure. So coming out of JP, the push, I guess you could say, coming out of there was to acquire a territory and several different franchises within a specific brand at once. So it was, in a way, you could say like a ETA, entrepreneurship through acquisition or a search fund type of model. Luckily, and I'll say luckily, that deal fell through. And I say that because if you think about just like the franchise landscape, there's 4,000 plus brands out there in the United States alone. And within those, a lot of brands have a cycle, especially in the restaurant industry, where it's either a fad or just a growth curve that they go from 5 to 10 to 100 units to 1,000 units. At some point, there becomes saturation, and the economics change drastically for a franchisee versus a franchisor and the type of operators who want to be in those different types of brands. I believe the brand that I was going after is now kind of hitting this point where it's getting a little bit more saturated, and it makes sense to be an operator in this space if you're much larger as opposed to, let's say, operating 5 to 10 locations.
Mm-hmm. Mm-hmm. Yeah, as you're talking, I'm thinking about is it Crumble? Is that the cookie
Crumble
business?
Cookies?
Yeah. I remember there's a couple that opened near where I live, and I remember like one of the local media platforms, profiled the franchisors, right? Franchisees. And I think they only own 1 or 2 locations, and I don't know. I'm not a food. I'm not in the business of food as you are. But my guess is that's probably more on the fad side of things. So especially when you see the caloric intake.
Yeah, it's hard to believe. I mean, there's some brands that probably won't ever go away, and I think you could name them off the top of your head. But like Chick-fil-A, for instance, and part of that is also because of the structure of how franchisors strike agreements with their franchisees. But I would consider Crumble more fatty than anything, but no pun intended there. Yes. But we'll see. Time will tell.
Of course, yeah. No, it's a really interesting space, and so you got into it through the perspective of, hey, maybe you buy buy one of these businesses that has multiple locations, and you're buying out the franchisee there. How did you then pivot to providing more of the services? Tell me a little bit about that journey.
Yeah, sure. So after that deal fell through, I kind of thought about what's next. And I knocked on a bunch of doors of business owners, similar to how like a search fund is doing it. And I got a lot of, we're not ready to sell right now, maybe later, but we could use help with XYZ. And as I did that more and more, I came across businesses that really just kind of had the common theme of they needed help on, we'll say like the data side of accounting / FP&A / finance and strategy generally. So after a couple conversations, I ended up taking on a few clients from those conversations that I had. And that's what spun up SMG.
Did you see that as a business in of itself originally, or was it, hey, you have capacity right now, you're still focused on buying a business, this is something you can do in the interim? Like how are you thinking about the formation of SMG? Yeah, in those early days. Yeah.
I mean, I think the goal, like I was saying before, or what I started out coming from JP Morgan, was acquisition and ownership. And I think that still is the goal over time. What this is giving us right now is chops, is more experience, more, I would say, notoriety within the industry to become a great operator. And then also, in a way, it provides the ability to do diligence on a lot of these companies and kind of learn how operations and what to do, what not to do. It's just kind of honing in that. So I saw it as a lens to, or a path to increase our operational experience and our ability to then also get into some of these businesses who maybe in 5 years wants to sell, and we're a prime candidate because we understand the business, soup to nuts.
Yeah, I mean, it makes sense. And it's one of the paths I think you see in some of these smaller, lower mid-market, businesses selling, or even just small businesses selling. Often they're selling to an employee. And so in some ways, you guys are positioned, you're not an employee, but you're a partner, and, you already have a relationship. And so it's sort of as a natural conversation to have if and when, any of your customers would be looking to sell.
Yeah, exactly. And I think if you think about the private equity landscape, and as I was talking about before, them private equity coming down into a lower, smaller companies, you really need to differentiate yourself. And the way to do that is by building a relationship, trust as well. And if a business owner is trusting you with their books, trusting you with their strategy and their financial growth plan, then they're more likely going to sell to you.
Absolutely. No, that makes sense a lot. As you think about SMG, so you have, you're having these conversations, you're kind of putting in the you're knocking on doors, you're kind of hearing this over and over of like, hey, not ready to sell, but we could use help with sort of FP&A / CFO, the sort of post accounting, post book close work. How did you think about building the sort of delivery model, team, et cetera, of SMG? What did that sort of initially look like? And then I'd love to hear more about what it looks like today.
Initially, it was me, myself, and I.
Yeah, I was going to say, were you the person doing all the work to start?
Yeah, I was the CEO and the janitor at the same time.
Yeah.
But so it started as me, and as I got to more and more clients, I just saw that this needs to become not the Peyton show, but the SMG show. Mm-hmm. And building a brand, I think, is one of the hardest things to do, especially starting from just you. I reached out to a lot of people that I know just across my network and said, this is what I'm trying to build. Do you know anybody who's interested in that? And slowly did some interviews over time. And I had a couple individuals who would work with me on a contract basis. So in a way, I got to interview them over a longer period of time. And they've since come on to the team, and now we're a team of 5.
Nice. So where you are today, are you still working sort of in the business doing any of that delivery, or is that mostly your team and you're kind of more the relationship manager, BD, and probably still the janitor as it's still a small team? What does your role look like?
Yeah, my role is still very multifaceted. So I currently sit as CFO of a real estate company, do construction, property management, et cetera. And so that's one of our largest clients, and I handle a lot of that. And that takes up the majority of my time. When it comes to developing the brand, I would say I'm providing the strategy, and then the team is helping me execute to go deliver whatever it might be, the initiative, marketing, how we think about just administration around the brand. Other clients, how we think about that. The other parts of the team are delivering on that, and then reporting back, and then we're creating this comprehensive type of strategy for client delivery.
One thing you mentioned a couple minutes ago was this notion of building a brand. And, there's certainly, you're seeing your clients and the franchises they represent, like there's a brand there, and there's a lot of dollars put behind a brand and so forth. But this is a very different notion of building a brand. And so how did you think about going from, and I think one of the places, what I call like self-funded entrepreneurs or these sort of experienced entrepreneurs get stuck, is clients coming to you and saying, no, we want Peyton, versus clients coming to you and saying, we want SMG. How did you navigate that?
Yeah, sure. I think there's a point where you either have to introduce somebody else into an existing relationship to then get them comfortable, and over time insert them into the relationship so that there's this natural stepping point where somebody can take over. And then on the flip side of it, it's just start them out from the get-go on a new client, and then it's somebody else who's managing the relationship, and then you can have additional capacity and grow. So it's not, I would say this has definitely been something that is challenging, and I think everybody who goes through, let's say, a service-based business, this is probably one of the hardest things to get away from just you and actually create a brand that can be scalable.
It's definitely a challenge to navigate that. And it sounds like you've been able to, and I love the concept of, you're sort of kicking off the engagement, but you're bringing someone in from the earliest stage, or you're working on the largest, one of your largest clients, but some of the smaller clients, maybe even just from a cost efficiency perspective for them, it makes sense to work with some of your team members. So sounds like you've navigated that pretty well.
Yeah, I think it's always a work in progress. I would say it's not something that really ever goes away. You have to think about that on a day-to-day basis. But we're happy with it right now. And as we take on more and more clients, it'll just become another thing that we're going to have to face every single week.
For sure. So I want to ask you to sort of switch gears a bit and put your hat on as more of an advisor and thinking about, and we talked a little bit about this before, but you have this notion of building institutional grade finance within some of these companies. But, without sort of necessarily relying on a PE fund's operating team or building this sort of bloated corporate team. This just isn't right sized to some of your clients. What does institutional grade finance mean to you in sort of a practical operator friendly way?
Yeah, sure. It's really about clarity. Having the data in order to make decisions, and also having the data in a timely basis to make decisions, is what institutional finance means to me. And I think it also means a lot different of things when it comes to the level or the size of the business. So if you think about just like how data flows through a company, at least financial data, accounting data needs to be structured appropriately. And if it's not accurate, then your P&L, your financials, it's very difficult to understand what's actually going on in the business. And then if your P&L is not structured appropriately, then it's really hard to understand what's actually going on in your business, even if the data is accurate. And then so that's like a core premise and milestone for a lot of business owners who say we need a CFO or we need to hire XYZ, and really what they need is a bookkeeper, and then they need a controller to actually put their financials together and understand the P&L and the structure. And then after that, it's everything that we touch, which is the analysis around why, what happened with the numbers, what's driving this margin, what's driving this action, why is my business functioning in such a way? And then how you do that analysis and the amount of analysis that you need to think about and perform grows exponentially as you go from, let's say, 3 to 5 million to 10 million to 50 million. And then as we think about anything beyond that, it's the strategy. How do we think about not answering the why, but then how do we think about pushing this or willing this into reality by creating a plan, a forecast, a strategy, talking with banks, talking with investors. So it's really kind of multifaceted depending on the size of the business and the complexity. And that's where we like to play in the multi-unit space of, I would say, 5 to 10 units at the minimum, because that's where we see complexity really ramping up. It gets out of the business owner's head and it gets onto it gets into the data, which is really what's important. And so we drive that conversation.
That's great. And as you think about, we didn't get into it before, so I want to touch on it here. So 5 to 10 locations, sort of the scale. Just to walk me through a little bit of the scale of the companies that you're working on, and then would love to sort of pull it back to, hey, people listening to this podcast are probably on their own entrepreneurial journey and how you think about sort of finance across even an earlier stage. But just for context, just give a little bit of the scale of your clients right now.
Yeah, sure. So when it comes to the sizes, we generally work with businesses in the $10 to $100 million revenue space. So that equates to 5 to 10 units and up to maybe 50 or 60 units, depending on what the AUV is, average unit volume. We've worked with smaller 1, 2, 3 type of units, trying to scale, trying to grow a brand or their footprint within a brand. But we've also worked with businesses much higher than 100 million in revenue. So today we, as I mentioned before, the real estate company, property management group with over 2,000 units that they manage. We also have another client that we work with that has more than 200 units of a QSR brand. So we have a variety of different type of businesses we have worked with and we are working with. And so just the problems are all the same. They grow in complexity if it's 5 to 10 units versus 100, but it's the same problem.
Yeah. I as you're talking, I'm thinking a totally random analogy, but I had a former boss who used to say, in terms of being a parent, like bigger kids, bigger problems. And I feel like it's almost the same of what you're talking about. If like the problems don't go away, as you scale up, if anything, maybe they become even bigger because you didn't necessarily put in the processes and procedures and systems initially. Is that right?
That's 100% accurate. Yeah. If you, and it also gets the same type of analogy could be put in place or related to the data as well. So the process, the data, if it's not clear, if we don't understand it, if we don't structure it from the foundation up, it's not going to change if you go from 1 unit to 10 to 100.
So how have you thought about even some of those scale up lessons in your own business? And particularly, you don't work with service businesses, but you are a services business. And so how do you even think about translating some of the lessons around data and putting sort of the right processes and procedures into place early on to like your own business or someone who's scaling a services business?
Sure. Yeah. So for us, it's all about data capture. And now with AI, you can process things so much faster. So we like to have as much data ingestion, as we call it, as possible. So a lot of that ends up being conversations and centralization of all of our information. And we use Notion, we use Gemini to record all of our calls and think about all the strategy that we're going through and the problems our clients have. And it not only helps us just like think through and record and document, but also gives us idea and perspective, because then we can put it through an LLM to help summarize and really kind of pick out some of the ideas that might be key for another client or for growth.
I think one of the things you're talking about, which I think is really interesting, is, I think what's really changed with the advent and the just increased popularity of the various LLMs is that data just takes such a different structure. I mean, it's unstructured, frankly. It's free form. And so where you used to have just a huge sample size of individual data points to really analyze something, what you're talking about and what I think makes sense for a lot of sort of service experience entrepreneurs is, hey, every conversation then can be turned into multiple different points of data, and it can be categorized, it can be analyzed in a way that just was never really possible before. So is that sort of what you're doing with your internal data?
Yeah, that's exactly right. Creating data now is so easy, especially with conversation and transcribing and the technology that we'll say AI brings to the table. So for services, it's all about thought and strategy, and we leverage that to the most that we can in order to help our clients and help about planning within SMG.
So we talked a bit about, okay, your own business, how you've thought about that. You have clients that are kind of across this range, but certainly kind of scale up to 100 million plus, but sort of scale down to 10 million, but even below that if it's a smaller unit size. What do you see that are sort of the common mistakes that you end up coming in? Like what are sort of the common problems that you're trying to solve as an outsourced CFO or FP&A team?
Yeah, sure. Lack of process, especially on the accounting and finance side. Lack of process, lack of data understanding. I think a lot of people don't have the ability to actually tell you what's driving, let's say, this line item on the P&L. And then I would also say they don't do a great job of how they think about budgets and forecasting. They think about it once a year and then they put it away and then they never go back and actually reassess or compare to it and then ask the questions why. And at the end of the day, like I was saying, finance, in my opinion, is all about clarity and driving clarity. And so understanding how numbers and actions relate is really the goal. And so you constantly have to go back and forth to understand, we thought this happened. What was the difference and why?
Mm-hmm. And related to that, one of the things you talked about was, or you mentioned before we hit record, was this notion of like growth decisions that some of your clients face. Could you talk a little bit about, what you mean by that, what key decision points you see, and then how you guys set your clients up for success on some of those inflection points?
Yeah, sure. So growth decisions could be a lot of different things, I suppose, but when it comes to an acquisition, some of the things that we can help out with are the actual acquisition modeling. and how that fits in to the business. And as we think about kind of that staged approach to what accounting and finance needs, or the needs within each business, as you start talking about more complex problems, which would be an acquisition or an investment in, let's say, another plant or another business or whatever it might be, the analysis around how that gets folded into a business and the underwriting of it is something that is of paramount, because I've seen so many businesses acquire a business, and then within 2 to 3 years, it was, let's say, buyer's remorse.
Mm-hmm. What are you typically seeing there? Like, is it, hey, they didn't totally understand the finances, and sorry, is it, when you're saying buyer's remorse, is it like, hey, someone's coming in net new to this business and they're buying it from the owner? Or are you talking about like, hey, there's a portfolio of assets and they're just they're buying another location? Or what do you mean by that?
Yeah, I would say it's the latter. So it's buying a portfolio of locations, and so there it's it depends obviously on what they're trying to get into. But let's just, if I give you an example of if you were a franchisee of Chick-fil-A, and it doesn't really apply to Chick-fil-A, but if you're going to buy another 5 Chick-fil-A's, you understand what the mechanics are and the operations. And so that's a pretty easy tuck in. But let's say we went from Chick-fil-A and we wanted to get into another brand, say Taco Bell. Understanding that business down to the actual nuance of why this is driving margin. How do you think about waste? How do you think about throughput on your drive-through? Sometimes that is, I would say, misled, and they don't understand the full details around it. Mm-hmm. And so getting into another brand like that, I think a lot of people think, I've done it with this brand, I can do it with another. It's not always the case.
Yeah. What I think you're getting at is interesting, is like sort of thinking about, as you're scaling, like the value of the portfolio, what insights you can take from the existing portfolio and bring into a new venture. And so my mind just goes to like even how you kind of teed up your own journey and looking at maybe SMG sort of emerged very naturally to solve a problem or fit a need that you were seeing. How have you thought about kind of longer term this potential portfolio career or portfolio of assets for yourself? Where's so you started sort of potential entrepreneurship through acquisition, initial opportunity fell apart, SMG kind of emerged. Where's your head at now in terms of looking at your own? Yeah. And the growth of SMG and like you overall.
Yeah, I think as I was talking about data, and I think that's kind of the core importance and function as we think about finance. And it's interesting enough, I think finance is naturally becoming the data owners of all types of data, not just finance, but operational, sales data, et cetera. As we think about that, we are very much getting into the data realm, and that's partnering with other companies on, we'll say, the IT side. And also looking at acquisitions within the accounting space that focuses on our niche of restaurants, franchises, and real estate, because we want to own the process from data entry to then the strategy all the way at the other end.
Mm-hmm. Yeah, and imagine even some of the client development conversations you have. I feel like sometimes people probably come to you, and you tell me if I'm wrong, is, hey, we need help with finance. It's like, okay, well, what do you need? Like, what specifically? And and I think you said it earlier, like they think they need a CFO, but they need a bookkeeper. Is that sort of the opportunity that you're trying to capture there of sort of owning the relationship end to end?
Yeah, exactly. And I think a lot of people don't even know the difference between accounting and finance. And I think there's definitely an opportunity to provide some education. And I think the way that you do the accounting side also drives how well and how easy your FP&A can be. So if you do it very well, the FP&A becomes very easy. The fact is that the FP&A and strategy and finance is really where you drive value, but it is nothing if accounting and data is incorrect and structured improperly.
What I love about what you've created is you started, you didn't necessarily set out to build the services business, but you saw that, you had sort of these repeated conversations. You saw the need. I think, as you just said, like, you're very clear on your niche. You're not trying to be everything to everyone. You started kind of post close of books, but also now looking at opportunistically, can you go kind of own that whole relationship? As you think about, like, if you were starting SMG today, it sounds like in many ways it's sort of been this natural progression, and you've listened to, you've used this data, as you've said, like you've inferred from conversations, you've adapted and so forth. But if you were starting today, what would you do differently?
Yeah, I think I would say we did not have the initial niche. I've had the background. I have other members on the team who have that background within restaurants, within franchises, within real estate. But it wasn't until recently that we actually decided to really hone in on that. And I think there's a couple different reasons, but one is differentiation. I think you really need to, in a services-based business, especially what we do, there's so many people out there doing the exact same thing, but that pie is drastically reduced if you focus on a specific niche. So I would say figure out what you really want to focus on, carve out that niche and start there. And then aside from that, get out there and talk to people, pick up the phone, network as much as you can. I think I had this kind of thesis back when I was at a private equity firm, probably in 2019, just before COVID. I had the very well-intentioned on building a network and just calling people just to have conversations, whether it went anywhere or not. It was just having conversations to build a network.
Absolutely. And so I want to dig into that a little bit before we wrap up, because I think that the niche point is really important. And you said, I'm actually surprised to hear you say you didn't necessarily have that niche at first. How did that sort of emerge? And at what point were you just crystal clear on, like, this is who we serve and who we don't serve?
Yeah, I think initially it was, we served several different industrial type of businesses when we first started. And what we saw was we got more calls around people in our network. And then we said, who's in our network? And it was franchise owners, it was real estate, it was restaurateurs. And so we saw that there was definitely a much better opportunity for us to get very deep into that niche than it is to spread across several different industries where most people are trying to do. So getting into that niche, I think, is really becoming a differentiator for us, and then helping us also just focus on marketing as well and how we present ourselves and in placement of the service.
I imagine at this point, because you spent the time up front networking, because you had the relationships in the past, and because you've gotten clear in your niche, is most of your business through referral, or how do you think about business development?
Yeah, that's exactly right. So it's all, I would say most of it's word of mouth. And again, like, if you think about accounting and finance as a business, it's generally not something, unless maybe you're a startup or something of that type of scale, where you see an email and you click yes and you're signed up. Yeah. It's usually something where you build trust, especially if you're taking over from like a finance or a CFO level. You build trust with a client and a business and an owner. And so having a referral from somebody that we know in a network who they trust us goes miles.
Well, it sounds like you've done a lot of the right things in terms of having those conversations, figuring out your niche, starting with yourself, but then building a team. So it's not just you trading your time for money. It's a real business that you're running, and there's a lot of growth opportunity. If you were talking to someone who's maybe still in that PE role or in private banking or another area of finance and is thinking about doing something entrepreneurial, what advice would you give them?
Give me a call. I'm more than happy to talk with them. But I would really say go out there and understand, is there demand for what you want to do? And then once you do that, actually knock on the doors and ask the questions. I think there's a lot of opportunity for now, the ability to do things either on the side or while you're working at a business. It's just to kind of kick around the tires and understand
exploration.
The exploration of whether the demand is there or not. And then again, find really that niche in which you really want to do, and then go right in head first.
Very cool. Well, Peyton, thank you so much for joining me. It's been really cool to learn more about your experience and dig into SMG and how you thought about building your business. If people do want to reach out to you, what's the best way for them to find you?
Yeah, sure. We can put my LinkedIn in the show notes.
Yeah, we'll put it in the show notes.
That's probably the best way.
Great. Well, thanks again. It's been a great conversation. Appreciate it.
Awesome. Thanks, Chrissie.
Thanks for listening to Self-Funded. If you enjoyed today's episode, be sure to follow the show wherever you're listening so you don't miss what's coming next. I'd also love for you to leave a review and share what you're most excited about on your own self-funded journey. And if you want to go deeper, check out my Substack. You'll find the link below. Until next time, keep carving your own path.